Hi, I'm Luke Lango, and this is Investor Place Quick Picks, where we communicate to you some of the market's best investment ideas in just 10 minutes.
America's leading innovation investor, Luke Lango's Investor Place Quick Picks.
Today, we're going to talk about a next-gen hyper-growth energy drink company that could turn into the next Monster or Red Bull. The name? Celsius Holdings, ticker CELH. Now, I first came across Celsius at my local Sprouts Farmers Market a couple years ago. I saw the energy drink can, it had the cool branding, all the right buzzwords, and the label passed my clean label sniff test. So I tried it, and man, it did not disappoint at all. I mean, lots of energy, like lots of energy, a great taste, and no crash. I've been a consumer of Celsius energy drinks ever since. In any event, my first encounter led me to digging in deeper, and that's when I discovered Celsius stock, which at the time was around $15. I recommended it to my daily 10X newsletter subscribers first, and then the stock soared to over $70 over the next few months. Big gains. But as you can see, the stock has plunged recently, as the recent growth sector meltdown coupled with a disappointing fourth quarter earnings report from the company sparked a 35% drop in the stock price. Now, despite the huge drop, nothing, and I mean nothing about the fundamental story here has changed. The data still strongly suggests this is the next monster in the making. So, I say buy the dip. Here's a deeper look. Now, I'm a huge fan of Celsius stock long-term because from where I sit today, Celsius looks like the healthy energy drink company of the future. A company that will one day challenge Monster and Red Bull for supremacy in the energy drink category. Here's the story. Humans love to feel energized. Naturally, they also love energy drinks. That's why the energy drink market is one of the larger beverage markets in the world at $60 billion, and also the fastest growing beverage category with a 7% compounded annual growth rate. But this hyper growth category has grown out of sync with consumer demand. That is, consumers are increasingly demanding healthy, all-natural, and functional foods and drinks, yet the titans of the energy drink industry, Red Bull, Monster, Rockstar, are still selling a bunch of sugar-loaded, not that good for you energy drinks. This reality represents an enormous opportunity for Celsius, a relatively new and small energy drink maker that is cutting out a niche for itself in the overlap of rising pro-health trends and huge energy drink demand. Leaning into its proprietary scientific formulation, which combines green tea with EGCG, ginger, and guarana seed to catalyze thermogenesis, Celsius has created a portfolio of unique, functional, healthy energy drinks that have been proven to energize, accelerate metabolism, and burn body fat and calories, all at once. Yeah, it's true, it's scientifically proven. And from my first-hand account, I can also tell you they do provide consistent functional energy with no crash. It's a great feeling for all energy drink fans out there. Plus, I mean, the drinks are vegan, gluten-free, non-GMO, contain zero sugar, have zero preservatives, zero artificial colors or flavors, zero aspartame, all the good stuff that young pro-health consumers like us are looking for in a clean label these days. So to that end, Celsius has created a scientifically superior and socially more relevant energy drink, which has the potential to turn into the next big thing in this massive energy drink category. And that's exactly what is going to happen. Over the next several years, I fully expect Celsius to leverage these pro-health drinks with its eco-friendly branding to rapidly expand product distribution, drum up huge consumer demand, and ultimately turn into a mini monster. The upside for Celsius stock comes from the fact that Monster is worth $50 billion, while Celsius is worth just $3 billion. My bullishness on Celsius stock is reinforced by the company's strong execution over the past several years, in which the company has rapidly expanded product distribution and increased consumer demand to the tune of a 665% surge in sales since 2015. Investors are somewhat concerned that this growth trend is slowing. Fourth quarter revenues declined from the third quarter. That's why Celsius stock fell off a cliff recently. But upon closer inspection, this drawdown in revenues is due to COVID-19 related restrictions in the company's international markets. If you back out those one-off headwinds, the underlying business momentum here remains as vigorous as ever. The company continues to rapidly expand product distribution. In 2020, Celsius' distribution footprint expanded by 18,000 stores to 82,000 stores by the end of the year. Importantly, management reasonably expects this expansion to accelerate in 2021 because retailers who have delayed planogram resets because of COVID-19, and many of those planogram resets include more shelf space for Celsius, are going to execute those resets in 2021 and 2022 as COVID-19 restrictions ease. So that should lead to more shelf space for Celsius throughout all of its current locations. Now, perhaps more importantly, Celsius continues to expand market share in the energy drink category at a very, very rapid pace. According to US SPINS data, Celsius' sales for the 52 weeks ended January 24th, 2021 increased 58% year over year. That growth rate is equal to about 8 times that of the overall energy drink market's growth rate. Concurrently, recent Nielsen data for the 4 weeks ended February 20th, 2021 shows that Celsius' sales rose 98% in that time frame, with the next closest competitor, Red Bull, registering just an 18% growth rate. And on Amazon, which is Celsius' most established sales channel, Celsius increased market share by 2.1 percentage points in February alone, clocking in at 14.5% market share. In that world, Celsius is now almost as big as Red Bull, who has 14.7% share. So, when you back out, look at the big picture from head to toe, the Celsius growth narrative is still on fire, despite the recent plunge in Celsius stock. And that ultimately means that this sell-off is a buying opportunity. Now, by my numbers, Celsius stock is dramatically undervalued following its recent 35% haircut. So, Celsius owns about 14.5% of the energy drink market on Amazon.com, where distribution is equal among all energy drink players. It's not equal in the physical channel, but I fully expect, given Celsius' impressive sales velocity and the shifting consumer demand towards healthier drinks, that physical retail distribution will equalize over the next several years too. By 2030, Celsius' drinks should be as widely available in grocery stores, general merchandise stores, and convenience stores as Monster and Red Bull drinks. Assuming so, and assuming Celsius can maintain the same momentum it has on Amazon in the physical retail channel, then Celsius' overall share of the energy drink category should clock in at around 14.5% at scale. According to management, that equates to a $2 billion revenue opportunity. That's roughly where I think revenues will trend over the next decade. Assuming similar profit margins on this business and valuation multiples as Monster, my modeling suggests that Celsius stock is worth around $70 today. That's why I think Celsius stock will bounce back from this dip and make a run back to all-time highs once interest rate volatility passes. Well, that's all we have for this edition of Investor Place Quick Picks. I hope you like what you saw. If you did, please subscribe, hit that notification bell, smash the like button, or give me a follow on Twitter. Until next time, cheers and happy investing to all.